Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live discussion of our strategy roundtable where we talk about current market conditions, any questions you might have, and how to use the Tradespoon subscription. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. Always want to welcome new subscribers. Here's my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. Since I left Options Express, I work as a consultant investor in several financial technology firms here in Chicago. Wanted to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Disclosures: trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, before we talk about trading system, let's talk about current market conditions. Looking at the spiders again, market is trading in well-defined range right now. 50-day moving average 332. That's the support. Overhead resistance short term is 342. Right, 342 roughly corresponds to the breakout back in February, a little bit higher. So that's the range. Next week, I think there potentially could be more downside as more people come back from vacations and after the long Labor Day weekend. I think potentially September is always volatile, especially second and third week. So potentially market can overshoot to the downside. I would not ignore that. The 50-day moving average, I think worst case scenario is somewhere between 326, 320. This is a lot of support. So this is where I would start, at least using dollar cost average to accumulate position. If you think that the worst case scenario is 326, 322, so then you start buying at these levels, 335, and if the market breaks through the 50-day moving average, then you accumulate and trade, enter more position. As long as the market below 342, 343 level, I would consider that this is bears are in control. All right, we see, I was actually looking at the Apple, it continues to make newer lows. Model, turned pretty bearish, right? Strong momentum behind the bears. Model actually see a breakout as early as today at 328, 329, trading in the level between 337 and 329. So I would not dismiss that case. Again, as the market reaches 339, 340, I would go short. And as the market reaches 333, 329, I would go long. Anything in between that, that's just driven by the news. So that's my view on the market. I would start thinking about accumulating positions. I am also keeping an eye on Treasury. Treasury are continue to trade below this key overhead resistance at 167. As long as the treasuries are below 50-day moving average, this is beneficial for the market. That means money are going, instead of going into treasury market safety, they're going into most likely equities. And similar picture, dollar. Dollar is unable to break through this overhead resistance, 93, 94. It's been trading for a couple months now in this range. I think this is a consolidation phase before next leg to the downside, which would be beneficial for the market. And I would also look at the VIX. Despite previous steep sell-off in technology name, we reached 40 level, we're back to the 28 level. So not a lot of anxiety and hedging going on in the market. I am watching Apple in terms of continuation of the sell-off. We briefly made new lows today. So today's closing would be important, right? Always, closing is important. What the So trading psychologies of average of all the investors. Apple continues to make new lows. I looked, it's basically back, giving up all of the gains since beginning of the August, and probably going into the earnings announcement, right? The after earnings rally is around 104. So potentially this is where the sell-off would stop, right into the earnings announcement, this gap. That's another 5-6% on Apple, which pulls the, influences technology and NASDAQ and S&P. In terms of support for QQQ, there's a lot of support at this level, right? We're right at the 11,000. So I would watch this level on QQQ. Today, kind of just not a lot of action. Home builders, metals and miners, emerging market. So that's the state of the market. Before we move on, let's take a moment of silence. Today is September 11. It's a 19-year anniversary. So let's just take a pause and take a moment of silence to honor everybody who suffered during on that day 19 years ago. All right. Thank you for doing that. And then let's get now into Tradespoon. So how do you trade in current market conditions? In the live trading room, I go over 4 things before you trade, before market opens. Sorry, 3 things. One is the trading plan. One is this trading journal, and the third one is future rehearsal exercises to decide on the key support and resistance level and what actions you will take. In terms of trading plan, I think these 2 rules are the most important. You might not be able to have a lot of experience in fundamental or technical analysis. You might not always be right in the direction of the market, but if you just follow these 2 important rules from trading psychology point of view, and from ability to make calm decisions when the market is in correction, technology dropped, close to 10%, I think more, 12%. So it's very important to follow these 2 rules. And these 2 rules are cash, on average 30% of the portfolio is in cash, right? If you look at all of the accounts and on all of the spectrum of risk tolerance levels. And then portfolio drawdown. The goal is to always, before you enter the trade, I always ask myself a question: what is my maximum loss on a position that I carry overnight? My goal is 2.5%. And then how many positions do I have? On average, I have 10 positions. So that means 25% of my portfolio is at risk, right? If I have a mixture of option and stock positions. So if the market pulls back quickly, and especially if you have a high concentration in growth names, right? Technology, consumer discretionary, consumer staples, then that pullback can happen quickly. We've seen technology pull back 10% in a very short period of time, very close to the sell-off in February. So you always want to make sure you're diversified and you look at how many positions you have. So if 2.5% is the maximum loss on a given position, then if you have 10 positions, that's 25% loss, right? The way to mitigate, you would usually have less positions. If you're new to Tradespoon or you just start trading, I would suggest start with 4 or 5 positions at maximum loss of 2.5%. This way you can get comfortable with the system, with the current market environment, with the models, the probability of success and return on capital. And no matter what happens to the market, you know what your maximum exposure is, right? So that's portfolio drawdown. The way to mitigate is to hedge, right? If you have all 10 positions in high growth stocks, then the probability that you will reach your maximum portfolio drawdown is very high. You can diversify by maybe buying gold, treasury, VIX, you know, have maybe a cover calls or butterflies. This way you will mitigate your exposure to the market and look at exposure that way. And in options trading, another way to mitigate this, I would always think of options trading as a stock substitution. I mean, yes, options allows you to leverage, but the issue could also be over leveraging your position. So when I buy, you know, 100 shares of a stock, you know, there's a difference between $20 stock and $200 stock, right? And 1% drop on that one contract will affect differently based on the stock. So I would suggest to use options as a stock substitution. So if if you're buying a $20 stock, you might want to buy more contracts. And if you're buying a $100 stock, then you buy less number of contracts. And always do it, you know, let's say you always invest in $40,000 worth of equity. So when you trade options, you would always trade in the same amount if you translate the contracts into the stock value. So those are the two, I would say, most important rules. The third one is trading is based on probability of success and return on capital. When you trade, I always think of trading in this, you know, bell-shaped distribution curve. Anytime you take in a trade, there's always a probability that the stock, if the stock is trading here, that it trades in a certain range by a certain time frame. So if you're a day trader, it could be 5 minutes, could be 5 hours. If you're carry position overnight, it could be 1 or 2 days. If you're a long-term investor, it could be a couple months. But anytime you trade using either historical volatility or implied volatility, you can determine what the range the stock will trade. And based on that, you can have reasonable expectation what your return on capital is. Based on our research for day trading, its price fluctuations on the S&P 500 stocks are anywhere from 0.5% to 1%, right? Depending on VIX. It's been 2 to 5% in March and February. Now it's probably close to 1%. So if you're day trading, then your expectation is 0.5% to 1%. If you carry position, for 2 to 4 days or for a week, maybe it's 2 to 4% price fluctuations, right? So you look for 2% gain or stop loss. If you hold in position for a couple weeks, or maybe it's 5%, in a couple months, maybe it's 10%. So this is how you would look at the price fluctuations and probability of success or return on capital. So for our model, we use 3 models: active trader, monthly trader, and weekly trader. And the average probability is 70%. So return on capital just depends on how long you're planning to hold a position. The longer you hold in position, the higher return on capital, right? You're looking for bigger moves in the underlying stock, but you're also allocating less money, right? Because there's a lot more uncertainty when you're holding position, 1 month than if you're holding it for 2 hours, right? And finally, once you know the probability of success of the signals that you're using, it's all a matter of managing your positions, entry and exits. All right, so I encourage you to always think about what is the probability of success of the system that you're using. Let's say it's 75%. Then your job, the final job, is making sure that the 3 winning trades, the gains will be greater than the 1 losing trade. Right, so you always look at your long term, you look at the model that you're using, the signals that you're using, you ask yourself a question: what's the probability of success? And then you are trading based on that. So I actually wanted to ask you guys, how many of you actually do think about, every time you trade, you actually asking either the system that you're using or the research that you're making, how many of you actually think in terms of probability of success? Aiko, Faye, Sophie, good morning. Alex, thank you. Thank you, Alex, for your comments. Vix. Alex, all right, thank you. I'm trying. Okay, so some people said try, some people said did, some people said I'm trying. I think this is a very important concept in trading. If you don't think of probability of success, I mean, this is definitely a technical trading. If you're Warren Buffett or you're a value investor, you look at the balance sheet and you're analyzing fundamentals. But you should always also have some kind of a system that says if a company reaches certain cash flow or certain multiples or certain dividends, how often will this result in the correct movement? All right, so that's the trading system. This is how I would encourage you to think about the trading. The next thing that I usually go through is the trading journal. I think trading journal is extremely important to make sure that you grade yourself and you're being honest with yourself in terms of are you on the path of becoming a more confident investor. So you want to have a true confidence, not just a confidence in one day, but over a long period of time. Dr. Menaker calls this concept true confidence in yourself as a trader, and are you a disciplined trader? So having the long-term confidence, I think, is extremely important, and having the discipline. I think the only way to achieve that, you either hire a one-on-one coach that constantly looks over your shoulder and coaches you, and or you join a group of traders, or you are keeping a trading journal. On a daily basis, you've been honest, you've been open with yourself, and you grade yourself, right? We talked about, this is probably one of my favorite blogs in Yellow Tunnel. Yellow Tunnel is trading psychology. This is a sister company with Tradespoon. I'm a founder of both companies. Started Yellow Tunnel for everybody who thinks that psychology does matter, right? But everybody talks about, trading psychology is 50% of the success, but very few people actually invest time and energy in learning about themselves and being self-aware and understanding the emotional intelligence. At some point of your journey as a trader, you will realize, I strongly believe that, you will realize that trading psychology is extremely important. Usually in the beginning of the journey, you don't really think about it, but once you're in the middle of the journey or you've been trading long enough, you will realize how important it is to be self-aware, how important it is to realize that not only there is an outer market, but there's always an inner market, right? The market that is based on your beliefs and based on your biases. So Trading Concepts is a great blog. Dr. Menaker contributes to this, writes these blogs, and last one we did process versus outcome. So we don't really think about, I mean, everybody wants to concentrate on the process. That's kind of, everybody believes that there should be process, there should be a business plan, and everybody should follow it, but very few people actually grade themselves, how closely they follow in the process. In corporate world, you have board of directors, right? You have financial controllers. They're looking how closely you follow in your business plan, your quarterly, your annual, your 5-year-old goals, 10-year-old goals. So there's always these checks and balances. For trading, since most of the people are trading on their own, retail investors trade on their own, I think trading journal is important, and this is where you would grade yourself. If you're concentrating on building long-term confidence and following your trading plan and well-defined process, then you give yourself A and B, right? If you're following your trading plan, you will have either positive or negative outcome, and then I would grade myself A or B. And I truly believe that to build a long-term confidence in yourself as a trader and make it more enjoyable process, not worrying about which way stock market will open or close the next day. You concentrate on the process, you give yourself A or B if you follow the process and you're not deviating from your trading plan. As soon as you, and for some people, including myself, for a very long time, it was and I actually talked to my friends who are traders, a lot of them do concentrate more on outcomes, right? Especially, if you're alpha type, depending on your psychology profile, there are different personality traits. So for somebody like me, it's very hard to admit that I was wrong, right? That I placed a trade and the trade went against me, and I was wrong. For me, what happened is that instead of thinking about that I'm wrong or right about the trade, I think about trading as it's an opinion, right? It's a research. It's just like in chemistry lab. You do research, you look at different data points, and then you're making, hypothesis, and based on that hypothesis, you move forward. Trading is the same thing. You have an opinion, hypothesis, market is going to go up, down, treasury is going to go up, down based on your previous experience, based on the research you're doing, and then you invest different amount of money based on how strong your opinion is. And sometimes, based on probabilities of success, you will be right, and sometimes you will be wrong. And the trade will not even right or wrong. Sometimes trade will go in your direction, sometimes it will not. So it's very important to learn not to think of, not to concentrate on the outcomes. And if the trade goes against you, instead of moving your stop orders and sustaining a bigger losses with the hope that the trade will go in your direction, you're just realizing this is one of the many trades, it went against you, and you're moving on to the next trade. It's just one of many trades. So you're not concentrating on outcome, you concentrate on the process. Until then, if being right is extremely important to you, it's very hard for you to admit the trade went against you, and you concentrated on the outcomes. The first step is to be self-aware of that, right? Be honest with yourself and grade yourself. Sometimes when you widen your stop levels and you're hoping that the market is going to reverse, then you would give yourself C or D. If you widen your stop losses and trade came back and went in your direction, then you give yourself C. And if you made, if you widen your stop losses or you cut your gains short, then you give yourself D, if it went against you. And the goal is to concentrate. I think being long-term confidence in yourself as a trader, it's very important to concentrate on the process and have only A's and B's. I know it's hard to say. I sometimes have C's and D's, especially when VIX goes high, right? When VIX goes 40, 60, 80, this is where we, our emotional, our what is it called, reptilian type part of our brain, the amygdala, is taking over your frontal cortex, right? So it's important to realize which part of your brain makes a decision, right? So, and there's a lot of blogs, and I'm trying to build a library of these webinars, like Trading Discipline webinar that Dr. Maneker has, and I would encourage you to review them, right? I would encourage you to review the blog and the webinars to especially when you see VIX jumping right now. Maybe you will see some pattern that can help you. The difference between inner and outer market by Dr. Maneker. We have managing extreme uncertainty. Obviously in March was important topic, relevant today in the technology sell-off. How important it is, sometimes, to be right? So perfectionism, what a real job of a trader is. So very interesting topics. I encourage you to review them. They're free when you do have time. Yoga is much better. Okay, yoga is just as important. I do agree that. Perfect. Thank you, Alex, for your comments. All right, so how do you trade? So trading psychology is obviously only half of the recipe. You do have to have models that give you different probability of success. So we have weekly trader, active trader, and monthly trader. Active trader is optimized for 1 or 2 days. It makes predictions for 1 or 2 days. A weekly trader makes predictions for 1 to 2 weeks, 2 to 5 days. Sorry, weekly 1 to 2 weeks. Holding time is 2 to 5 days. And monthly trader, holding time is 5 to 20 days, making prediction for 1 to 2 months. So all of these 3 models, I trade in a live trading room environment, right? So we have elite subscription. I encourage you to try this out. The main components of Elite subscription is that you have access to trade log. This is my live. This is through via API. I'm synchronized with my brokerage account. So every time I trade these models, active trader, weekly trader, monthly trader, or I do earnings trade, I would you would see all of the trades that I have. So today, I have closing my position in Peloton. This was earnings strategy, CHY earnings strategy, and CMI active trader, right? The active trader from yesterday that I'm closing. So you have access to the trader log and also SMS messages. Every time the trade gets filled, you would get an or I changed an order, you will get an SMS message every time I get in or get out of the position. So very useful feature. This is for somebody who either want to see every single trade that I make across all these models, or active in the market, right? And you're just looking for ideas, and some ideas, you want to participate, some you don't. Also, instead of a trader log or SMS message, which is a nice feature if you're not participating live. So we have a morning bell and closing bell, the first hour of the market open and the last hour of the market open close. We have live trading room where you can actually see these trades as opposed to looking at the log of these trades. So this is Elite Trading Circle. I encourage you to try it out. But this way you have exposure to all of my trades and the models, and I add comments, why I trade some of these trades. If you're looking for less ideas, maybe one idea a week, you have a full-time job and you're just looking for supplemental income, we do have premium portfolio. This is where I trade option spreads. So Microsoft, you can see order date, September 7, I entered into the spread, right? So at $3.45. So you can see all of the open positions, all of the open working orders. There is evening video. If you're new to Tradespoon, or if you're new to trading, you actually have an instructional video that I try to explain the reason. I usually have top to bottom approach. Where do I see the treasury market? Where do I see the currency market? Where do I see equities, value, growth stocks? And because money has to float somewhere, right? They usually float from major markets like treasury, currency, commodities, and equities. So you have an instructional video that explains that, and also the reason why I decided to enter Microsoft, right? And then same thing, you get SMS message every time I trade. You can see all the historical trades, and you have a choice. I trade option spreads because this is something I'm comfortable with, and I know what my well-defined risk versus reward. But some people are more comfortable trading stock, right? So you would buy Microsoft stock, right? And then you can look at the chart of my Microsoft, and you can look at the probability of where the Microsoft is going to be by a certain price point. And usually I'm looking for these predictions on Sunday. Model runs and provides 4 predictions. For Microsoft, 4 out of 4 predictions are higher. So that means that an accuracy is 80%. So it's a pretty strong signal that basically shows that if you look into now, end of October, November, going into elections, the model sees that the Microsoft is oversold and will rebound. And there's 80% chance that will happen, that the average price between Sunday and next 2 months, the average price will be higher than 214.25. So this is a premium service, 1 trade a week. We also have a Robo Investor. Some people are more comfortable trading stocks. This is where I hold 20 to 25 positions, right? The idea is to risk less than 2.5% per position. So usually, I would allocate 5%, 4 to 5% per position. Sometimes I do dollar cost average, maybe put 2% of the position initially, and if the stock goes against you, put another 2%. But these are the positions where the target gain is 10%, stop loss is 10%, 20 to 25 positions. There are 4 new positions a month. So it's a newsletter where you get every 2 weeks, you get 2 new trade ideas. right? And usually the portfolio contains anywhere from 20 to 25 positions. Unlike options positions, I have more time, right? I don't have to be correct by October and November. Some of these positions I hold for a couple months, some of them I hold a couple days, some of them I hold, almost a year. If you start trading, let's say in February, and all of a sudden, or if you start trading now, and some of the stocks in technology are down 10% because the entire technology sector is over, so then I would hold these positions longer. So this is the main focus in terms of live portfolios, depending on where you are in the journey as a trader and what your risk tolerance level and how often do you trade. These are the different choices you have. Again, follow the first two rules of the trading plan, cash and portfolio drawdown. One thing that I have noticed sometimes, I think if you don't follow those two rules, some of the subscribers trade in all of these portfolios. They trade premium, they trade elite, they trade live room. It's okay to cherry pick. Some people do trade short-term and long-term trade, but always go back to rule 1 and 2 of your trading plan, right? Always look at your cash position and your maximum portfolio drawdown, because these are the signals. They have 75% of accuracy. The 25% inaccuracy usually happens when you have sudden sell-offs, right? Like, technology was a perfect example, right? We started talking about that technology is overbought, probably since May, right? Since May, people would say, and including myself, that we're due for pullbacks, and we had 2 pullbacks, 2 days of pullbacks, and market just continues to go higher. And then all of a sudden, it was on September 3rd. So timing this 10% or 15% correction, I think I don't think anybody can do it, right? With any level of high accuracy. And I'm following a lot of institutional research and equity and retail research. Nobody can time these events accurately, right? They can anticipate them, but nobody can say, well, it's going to happen on September 2nd, right? Or 3rd. I don't think it's possible. That's the randomness part. If somebody could do it accurately, then stock market would not be random. So the only way to mitigate these 10 to 15% correction, A, is to be diversified, right? B is to hedge yourself, but always look at the portfolio drawdown. This way, if it comes and when it comes, you look at it as actually a rare opportunity, right? Technology is down 15%. If you believe we're in bull market, well, that's a great opportunity to buy technology stocks, right? Yeah, they can be down maybe another 5%, but as long as you believe we're in a bull market and technology, people will still work from home or remotely, and they need servers, they need networks and routers, switches, or they need iPhones and 5G networks is here. Then as long as you believe that this trend is intact, this is opportunity to go long, right? And use these corrections as an opportunity to invest. So these are the live portfolios that you can follow. We talked about signals, active trader. So the way to look at it, like today was a Delta airline, right? So you look at the pre-market futures and you make a decision. Do I want to buy it at the predicted low, 31.79, yesterday's close, or predicted low? Today futures were higher, so I usually would buy at the open price, right? So 31.79. So if you look at Delta airline, usually I would wait first 15 minutes. Today's what? February 11. Right, so you wait first 3 minutes, 31.79, and then you buy at 31.79. Usually I wait 15 minutes, so I would have bought it here. And then, I look for 0.5% profit. 0.5% profit would be 15 cents, or 1% profit would be 30 cents. So at 32.10 or 31.95, you would get out of the trade. So this is how you would use the active trader. Sometimes, if the stock gaps, let's say Delta Airline often gaps, let's say it opened at 31.95 today. Usually I don't chase the stock, right? I wait for it to pull back to the entry point. So if it opened at 32.14, I would not trade. If it pulled back to 31.79, 86, close to the entry point, then I would enter. the position. So you just need to be consistent. Some people always do it at the open price. I personally wait for these two entry points, either the predicted low or yesterday's low or previous close, right? Those are the two main trigger points. And the strategy just depends on where do I see the futures. If I see the futures are higher, then I've usually predicted low might not reach. Today, Delta Airline is $30.91. Most likely, it's not going to reach that point when the market pre-futures are higher, right? So model sees it as 31, but I don't think that potentially, most likely, it's not going to happen unless we have middle of the day reversal. So that's how you would use. Right now, we only integrated with trading block. So the only way to use Elite Circle right now is just with trading block. What happens depends on who is the winner is the loser. Kevin, thank you for your comments. Alex, Delta Airline. Yeah, Delta Airline was I've been trading around this position. So, and that's actually interesting. Model is persistent on airlines, that the airlines are outperforming the market. They're not participating in the pullback. Back in April, May, and June, any pullbacks were led by the COVID-19 stocks, airline, hotels, cruise lines. Now you don't see, now the corrections are led by technology stocks, and airlines are persistently going higher. So the fact that transportation sector, right, in general, the fact that the model identifies these stocks, and the fact that transportation sector is continue to outperform the market, at 52-week high, companies like railroads, UPS, FedEx, speaks of the V-shaped recovery, that this is not a narrow leadership, right? We have transportation at 52-week high, we have home builders 52-week high, we have materials 52-week high. So it's not a narrow leadership like a lot of people were talking on the news, right? A lot of people just said, well, the technology is led by mega cap stocks, now they're selling off, so we're in correction, market's going to sell off. But I haven't heard, like on Bloomberg or CNBC, anybody talk about that. It's not a narrow leadership, that outside of financial and energy, other sectors are also participating in the current rally, like consumer staples, right? Procter & Gamble is at 52-week high. So that's an interesting observation, and I would keep an eye on what the model sees as the stocks that are leading. And on yellow tunnel, you can actually see more. That's why I like yellow tunnel. I mean, it gives you a lot more symbols, so you have to be careful. The idea is not to trade more symbols, but it does show you other stocks, like financial REITs, or multiple stocks in airline, like Delta Airline, Alaska Airline, furniture stores like LEG or Restoration Hardware. So just gives you a wider perspective. All right. Any other questions? Irina, question on Tesla. I think your portfolio, there's a lot of discussion about these work from home stocks or these high growth stocks. My answer is the same answer, is just, you look at Tesla, you look at QQQ, very similar price pattern, just, Tesla is obviously higher beta, higher volatility, right? But I think this is an opportunity to go long. But again, I would be careful. My personal opinion is that there will be rotation, and we're actually experiencing rotation between value stocks and technology stocks. I think value stocks will outperform, and I think it's more important than ever, if you're heavily concentrated in the growth stocks, at least try to diversify and start buying companies like Disney or JP Morgan, like best of breed in the value sector, right? They've been underperforming, and I think they will outperform the market, or home builder stocks or material stocks. You see that they do outperform, and I think they will continue to outperform, like Freeport, McMoran. Build a diversified portfolio, because if you're heavily concentrated in technology or growth stocks in general, like Squares of the world, or PayPals of the world, Pelotons of the world, there could be more correction, right? I think the bull trend is intact, but that doesn't mean that Square cannot go back to 110, right? So if you're buying at 140 for Square, you need to be ready to buy more at 110, kind of using this dollar cost average. Same thing with Tesla. I think it's a good opportunity to pull back 30%, right? Went from 500 to 325, 180 points. That's 35%. That's a meaningful correction. But that doesn't mean that Tesla will not drop to 275, right? So if you use this dollar cost average, and next 2 weeks could be volatile, the idea is, this is a pretty negative bearish price pattern. So long-term investor, this is a great opportunity to go long. If you're a short-term trader and your time horizon is 2 weeks, well, there could be more sell-off in the next week. And that's my opinion about all growth stocks. They all, Tesla and Apple is the same price pattern, right? Different business models, but it's the same price pattern. All right, any other questions? Tradespoon, yellow tunnel, market conditions in general. For longer term trade, I do like, you can see in my videos, I very often use seasonal chart, right? These 4 predictions based on our model that runs on Sunday, right? This is a static snapshot that shows you for the spiders, 3 out of 4 predictions are higher, 41% correlation. Usually September is volatile, and there's usually, you can expect anywhere from 5 to 10% correction in the months of September, just like you did in months of July. In July, we didn't have that, even though I thought we would have it. We have it in value stocks, right? If you look at value stocks, which is now kind of this diversion, in July value stocks, there was a correction, right? Pretty meaningful correction, went from 104 to 96, so 10% correction. Even in August, we went from 108 to 104, so 4% correction. So I think this is more of a just a kind of a seasonality, but end of September, second week of October, I think going into elections, I think we'll reach, we'll at least retest the year-to-date high, right? That's what usually happens by end of October. And then after elections, depending who's gonna be, if Republicans stay in power, then I think we're gonna have another leg up. If Democrats come to power, then usually there is at least a couple months of correction. But I'm not good in predicting who's going to win, so we'll just have to be patient and wait for results. Thoughts on gold? I'm personally long silver, but I would buy gold, silver. I think these are very good pullbacks, and we are in a reflationary environment, and by definition, in the reflationary environment, gold is going to continue going hard. This is a consolidation. Potentially can break this level. I mean, it is a descending triangle that can usually cause a breakout. If there's a breakout, I think it's going to be a false breakout, right? And I would be a buyer of gold. And I currently, if you look at Elite, if you want to see if I have any positions, you can always go to Trader Log, type in silver, look at the past 60 days and actually see all of my trades in silver or GDX, gold miners. I haven't traded gold miners for a while, but you can see all of the trades. All right, it's 10:18. Any big plans for the weekend? Are you guys, is this anybody's first time at the live event? Anybody who's here first time? I do see some new names. All right. Any plans for the weekend? Sophie, dollar US, is it US dollar, DXY? All right, so some of you going to the pool, that's nice. Chicago, the weather is not good. I just came back from Tennessee and it's like a different world. Dollar, I think, is gonna continue going down, continue going lower. All right, reflationary environment, a lot of money. I don't think we're in the bear market, so I think US dollar is gonna, this pattern is gonna continue. Alvaro, welcome. Faye, thank you. All right, guys. I think that's all I wanted to cover for today. I'll stick around for the next couple minutes in case you have questions. Other than that, happy enjoy your weekend. Spend some time with the friends and family, and, recharge, and be ready for next week. We're hopeful to see everybody during live trading room on Monday. Aiko, Alex, Alvaro, Andre, Bob, Bucks, Pushy, Clark, Claude, Craig, Dan, Dave, David, Don, Alon, Ted, Irina, James, John, Joseph, Kushi, Kenneth, Kenny, Kevin, Liz, Matt, Marvin, Mary, Mike, Nizar, Peter, Rajesh, Ray, Richard, Ruben, Sophie, Steve, Tony, Vitus, Venkat, a lot of traders. Thank you very much. Have a great weekend. If you do appear as a trader, do me a favor, click on profile and update your name, first name, and re-register. So at least I know your name when you guys ask questions or when you attend. Thank you very much and have a great weekend.